following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 7th day of May. My pleasure to be here Monday through Friday on market days, and let's see, I will not be here tomorrow, but we're looking at a very interesting situation. We're looking at an interesting situation because there are signs that are suggesting that the tide has changed and that we are maybe halfway, maybe a little more, we're not sure yet, into the correction. The correction for the Dow started on March the 3rd when it made its high. So that's the entire month of March, entire month of April, and a week of May. So it's 2 months exactly that it hasn't broken to an all-time high. I would say the most important question is, do we rotate? Do we just gyrate in a trading band all the way through from, I would even say from the beginning of January, end of December, all the way through, and have a correction, a sideways correction that sees some sectors that were absolute leaders become leaders to the downside? It's going to be a good question because that can happen. My thinking here is 17,500 is really the critical point. So 3 great hours you've had. You've had John Logan right at the beginning. You had Steve Rhodes. You had Tom O'Brien right there on the hour, 10 o'clock Eastern time, giving an update. It's a great addition to our news coverage right here and chart coverage, of course. And Steve came back. Steve's doing a workshop tonight. Think about doing something like this. It's really important. You get to know the psychology, your own emotional makeup, your own manner in which you deal with issues, positive and negative, the way you can collaborate with the parts of your brain that are giving you mixed signals. Which ones do you choose? I'm sure those are all areas that Steve Rhodes is going to cover in his own way, in an imitable way, and very thoroughly. So it's tonight. Check it out. Two Thursday nights of excellent webinar, commentary, action, and reaction. And I would suggest, if you have a chance, think about doing it. Just go to the front page of TFNN, check it out. Now, I should also just thank those of you who have sent me emails and IMs, etc., and messages, just to say that the webinar that I did this past Tuesday night, together with a webinar that I did a week before, together with the one from the 19th on the 1929 match and mismatch, has helped you in your thinking of the market, and is provocative in that it created areas and distinctions that you were either unaware of or didn't really realize quite what the impact would be if certain conditions were met. So I appreciate that. That's exactly what I wanted. A thought-provoking webinar that has specifics as well as projections, and we'll see what happens. So let's get to the numbers here. We've got the Dow up 36 after being the futures were way down this morning again. Came back very nicely. The Dow's at 17,878, up 36. S&P's up 3 at 2,083. The comp index is up 13 at 49.32. Gold, wow, gold's struggling. It's down 8 at 11.82. Silver's down 16 at 16.35. Platinum is down 12. Copper's back way under the threes, is at 2.93. Crude oil is down 59.28. What I said to subscribers this morning was, I can't remember, did I show the chart? No, I did the chart. Let me just show you something. The SCO is at 200%. The pro shares ultra short Bloomberg crude oil. Looked to me like the USO, which is the United States Oil Fund, ETN, was making a shorter term 120-minute peak F top in the Chapman wave, the peak E possible today, and that could help the SCO as crude oil pulls back and the long position of crude starts to rally. It's exactly what we're seeing. You know, I just decided that we would not get a trade. I don't think this is going to be more than a bounce at this particular point. And I decided that we've got many other things that we're looking at. We are looking at the short side in many sectors. I just keep my focus. I want to keep my focus there. Now, this is also interesting. You see the TBT? Look at this. The TBT has had an incredible move to the upside in the shortest period of time, in a kind of a cup formation that broke out in the Chapman wave in a cup and ladle pattern. What is the TBT? It's the ultra short Lehman 20-year Treasury bond ETF. And if you take this as the right there, if you take that line right there as the vertical, I'm doing two things at once here, the vertical plumb line, and you do a left side to the right side, you will see, this is not going to work. It's going to miss. And what happens is the right side came in on the 28th as being a price time match to 47.54. That's why I say learning about the Chapman wave plumb line is a lesson in mathematics as well as artistry. I love when it's the exact low that you get and you can make a left side, right side projection. It happens often enough in the arch formation or the cup formation. But sometimes it just doesn't do that. And what I tend to do is I go for certain candles, and I've had a webinar on all this. I look for certain candles could give me clues. I look for a trend line like this right there, Chapman wave inside wedge trend line that says, hey, wait a minute, mister, you're going for the wrong thing. So if we were over here, look at this. If we're over here and we're trying to do this projection, and I've chosen the specific points of contact that we always use, then I would have said, well, that's the first one. We're going to miss. So I have to go out longer. I'm going to go out to this candle right here. That might be too long. It doesn't matter. I'd rather be too long than too short. And that says we can go all the way from there, make it green, right there, to there. All right? And what happens is you've gone past it by 2 days. And that would be the projection. And that would say, right there would be my outlook. So these are patterns that if you know anything about the Chapman wave, if you know about the Chapman wave methodology, my CD introducing the Chapman wave methodology, or the chapters, what, I can't remember now. I should remember, 27 chapters or something. You will learn that you can have projections to the upside. But most importantly, what I said to subscribers is that this is likely a peak D, even though it's just missed the 49.03 200 period exponential moving average on the 200%, the 200% short, the TLT, the Lehman 20-year T-bond fund. And if you look at that, you should see pretty much the same thing, but to the downside. There's just one difference, that in the projection to the downside, you would go from here to here. And that hits exactly. So I love to do these. And you know what? If you start moving away from it, it's not a big deal. You just say, okay, you're in a very, move on, folks, just move on, nothing to see here. And you look for the very next thing, which would have been the rectangle formation. Once you start to break down, and what does it say? Oh, great, now we've got a huge rally in bonds. No, what I think is you've got a hiatus, a re-energizing of the downside in the general market, and that allows for a bounce here And that's why we only wanted to add to shorts on in specific areas and specific conditions today. Not really looking at the long side. No, there absolutely always are long positions you can take in a market like this. But I want to keep focused. I want to keep focused on downside activity just for the moment. If over the weekend something else happens, I'll try to change my leaning towards adding some longs. But look, we had General Motors because it really showed a very nice pattern. And it said if there was going to be a rally just the other day, that rally should take in areas that are showing some buying. And it seemed to me that General Motors showed that just on a short-term basis that there was some buying going on. So we got in, and then I said, you know what? I don't like what's going on. We got out for a very tiny loss on a very small bit. It was only a very small position. It was like a starter position to see. And then I said, you know what? I really like General Motors and Ford looking out. The more I'm reading now, the more I'm understanding that something's going on here that's really important. And it has to do with, when I talk about American automobile companies, I'm just talking about the traditional names. But the more I dug into it, the more I got into the specifics of the percentage of parts and the percentage of the cars that are actually manufactured in the United States, we've got something much tinier here. We've got, it turns out there are 12 or 13 cars that are really fitting the bill of maybe 75% American parts, and maybe the majority of the car is put together in the United States. That's very interesting to me. But I still think that General Motors and Ford are going to have a terrific later part of the year. Also, if I'm really thinking about this particular period as a time where we are already in the 5th or 6th or something like that week of a mini recession, which you won't see until the statistics come out and the economists make this brave assumption that we're in a recession, mini recession. I don't know what they call it, a mini. I'm calling it a mini because there are areas of the economy that are actually working quite well. That's usually the time to get real nervous. So we'll see what happens. All right. Now, here's another thing. You remember we're talking about auto companies. We're talking about the auto parts areas. So AutoZone looks to me like it's really struggling here. And there's a real good chance that it's made some kind of a top. It could turn out to be not a short-term top, maybe even a more intermediate-term top, especially if you put it together with Orly, which is O'Reilly Auto, which has made its top and is really struggling here, made a peak E in the daily, probably a peak F. So we're going to watch this closely. So we've got the dollar. I haven't finished looking at the dollar. The dollar is trying to form some kind of keep drawing this in here as a cup formation, keeps going lower and lower. Yeah, I think that the bonds are going to be the key right here. I think they're having a little bit of a bounce, and then I think that the yield goes a little higher as we take a tumble.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
On one of the other windows that you have there. So I'm just talking to my engineer. My charts are working fine. I've reconnected. Everything should be good. So I'm not sure why it's doing that. Okay, I'm just going to go on with these things. So the reason why I said to subscribers this morning that there should be a bounce, be a little bit careful here, because there could be a bounce, is number one, the TBT is making a peak D, so there could be a pullback that allows bonds to move higher and yields to come down. And at the same time, the right here, this is what I showed my subscribers. And what we're looking at is the Dow chart. And this is what I show every day. This is the Dow. Look, it's under the 9-period exponential moving average. Technicals are very weak. But wait a minute. Look at this. Peak D. Remember we had a peak D in the 120-minute chart just the other day on the 30th of April? And I said, be careful, we could have a bounce. We got that strong bounce. Well, this is the same thing, except we went even higher. We went to 16.36 in the VIX yesterday. Pull back a little bit today. Still trading at 1527. That's kind of high. And the Dow's up 77. The S&P's up 7. And look what's going on. You've got the VIX pulling back in D. I think it's going to stall at about 14.70 to 14.60. And at that point, we maybe will see another bout of weakness. This is the bounce that we're getting right here in the 120-minute Dow chart. And look what happened. 179 you went to in the TRIN, the short-term trading index. I have to chuckle because I had an email at about 7 o'clock this morning saying, "Hey, that's great, good eye. I've made a ton of money on the short side of the E-minis. Would you think that we can go down a little lower, or should we take profits? I'm going to be out during your show. I won't be able to do anything." I said, "Take profits." Thank goodness, because that was a turnaround. The market went from, at that point, -9 in the S&P to where we are right now. We're at up 9, from -9 to up 9. That's a big difference. So, okay, now back to our story. What I want you to do is this. I wanted to go through in the daily chart to show a couple of things. We spoke about Apple yesterday, and what I was saying is that I think Apple is on its way down, but in the meantime, it could be a little bit of a bounce as you make your second U-shape or bowl shape pattern. Very important, because the technicals are still weak, and if Apple, for whatever reason, by Monday or Tuesday, starts to take out the low of 122.60, and it's 122.60. It was too far. 123.10. So yesterday's low was 123.36. Yes, 123.10. Then all of a sudden you're starting to see something very different in Apple. It's starting to make the 9-period moving average resistance instead of the support that it was making the other day. The 120-minute chart shows the magnet of the 200-period exponential moving average. So it should chop around, up and down around here, until it makes a decision that it's either going to break down or have another bounce. Okay, that's Apple. Now, I just wanted to go through a couple of leading stocks in different sectors. Disney is one that I wanted to focus on. You remember I believe I was looking at Disney the other day, and I said, "Oh, gap up to a leg F." Either I was thinking it or I charted it. I don't remember. Maybe I didn't say, but that's what I was thinking. So I'm going to be watching it real closely. It made this rogue wave to a peak F on the 5th to 113.30. Well, it's starting to, yesterday was an ugly day. It had a reversal same day. It had an ugly day yesterday. But that 9-period moving average is going to be so important. It's under it in the 120-minute chart. But look at the daily. And this should be a good period for Disney. So that's the reason why I want to keep it on my radar here, because it would also be helping to tell whether or not we're going through some kind of what I call a mini recession. And it's got an alternate count, F/B. Technically, it still looks like I've got to call it B rather than F, but it doesn't matter. At this particular point, there's nothing I'm doing anyway. I'm just watching Disney as a kind of a key indicator stock. But I might take a position, but I don't know if this is a short. I think this is more a buy it if it can pull back from 109s to the 104 to 103.50 area. That's the area of support that I think I'd be looking at it to say, hey, are you about to move or not? So I don't know what to tell you about the charts over there. Frozen again. Frozen. My granddaughter loves to sing that song. She's probably moved on from that. Let's see. So that was Disney. I want to move around, and I want to go to the chart of. Is that a break? Yep, that's a break. I want you to go to the chart of the VIX index to show something very interesting. I've got it up, and let's see if it shows. All right, I'll be back straight after this break. Basil Chapman, Dow's up 80, S&P's up 8.70.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So what we're looking at, folks, is we're back. We're looking at a peak D back on the 26th of March in the VIX index. Pulls back sharply. And now we've just had a VIX index rally to a D in the 120-minute chart, and it is a peak D at this particular point. But there's a difference. It's trading now above the 200-period exponential average, the coral trend line, and you've got a VIX resistance line right there that it just hit right there. The pink line, pink dash line, inside Chapman wave, inside wedge, and that's to a different left side line that I used as an inside wedge target line, because I based it on the left side, right side price time action. That says that under this circumstance, 1719 should be hit. It's at 1521. It's 2 points higher, but it should be hit by tomorrow. Is that right? Yeah, tomorrow, this time tomorrow. However, whoa, is that? No, that's the 10th. That's the 11th. Sorry, that's Monday. At this particular point, 9, 10, 11, 8, 9, 10, 11. Yes, Monday. However, at this particular point, what we're looking at is that 1485 to 1459 level right there, which is in fact the support level that needs to hold. I'm going to be watching that. Because if you start straight back down into the 14, 13 area, the 14 level to the 13 level, in other words, under 14, that's just going to be buying pressure. This market will start going back up again. So we're watching this. A very critical, I said yesterday, critical 3 days coming. Well, yesterday was the first, today's the second. Tomorrow could be the third. And so let's get out of this, because I wanted to show the daily and the 120-minute chart. And as we leave this chart, I also just want to say we've broken. See, this is what I talk about when you're talking trend lines. This has been very important, this declining trend line. But it's only important because it's just showing you that the price of the volatility index has not managed to close above this trend line ever, since it was drawn from the top at 3106 back in October of 2014. So this is the first attempt, and that's the reason why I think that we're in here, in this particular period, a vulnerable period. And it's going to be make a big difference if we go through these levels on the downside. 70,500 is the Dow support that needs to hold. Probably it's a rising trend line. By the time we do it, it may be next week. But now it's actually about 17,380. That doesn't matter. It's really a close under the low of 17,579, the low that was made back in the week of the 3rd of April. That's really the issue. So I'm saying 17,500 to really confirm that it's a far more serious decline. Then I'd have to put it into the 17,300s. Why? Because then it will decisively break that trend line in the weekly. 17,591 is the 9-period exponential moving average support. In the monthly, it'll have clearly taken that out and will start to show what is resistance rather than what is support that we've got to be focusing on, because those resistance points will go lower and lower and lower as the price goes lower. Now, this is another trend line that I want you to just extend to show something right there. Look at that. Hit it exactly. And that candle is going to be very important, because so far it's got such a wide range, the candle of yesterday, with a high of 18,019 to a low of 17,733 in the Dow, contract, the Dow, not the index, that it really suggests that the level to watch now, even closer, is this rectangle formation. So a close above 18,020 would be very positive, shorter term that is, and a close below 17,733, shorter term that is, would be negative, because a lot of key supports would have been broken. So this is just a bounce, a counter trend bounce in the tidal change in the daily chart. The weekly chart, I have to wait until tomorrow's close. I really do, because let me show you why. Look, the Dow is only sitting on the 9-period exponential moving average. It has to close decisively below with the MACD negative, which has been in. That's the reason why we've been in short positions on the Dow. And the stochastic has to be under 80%, which it is. But I still need to, it's a weekly chart. You need to wait for the full week. Look at the S&P, SPX.X. And then what I'd like to do is to jump around in different charts of stocks. The S&P has got a lot of support. In fact, the S&P won't give me a sell mode signal in the weekly chart until it takes out 2050 support. That's 300 Dow points lower, 37 Dow S&P points. That's a lot of points. Something's going to have to happen. That's really quite ugly for that to occur. Okay, so now let's just do this. IWM. IWM is already giving a signal. This is by Friday. Pretty sure I'm going to go to a sell signal in the weekly chart of the IWM, the Russell 2000 ETF. It's already in a sell mode in the daily, but the monthly hasn't even given a signal to say it's made a peak yet. It has to have the whole month of May lower than the high of April in the 127 area, 127.13. So let's go on here. We've got the QQQ, which were acting quite poorly, and they're still acting quite poorly. And I'm going to suggest that this is probably going to turn out to be a peak F in the weekly if the weekly chart at any point closes below 105.50. Below that, I'm pretty sure that I'd have to say we're done for the upside for now. But of course, day is young. Even today is young. Look at the New York Stock Exchange, NYA.X. That is just having a very solid series of narrower and narrower candles moving in a in a wedge formation to slightly higher highs. But really, it's only the daily that's in a sell mode. The weekly hasn't even gone to a sell signal yet, let alone a sell mode. And the stochastic's way up at 87%, and the MACD is not great. It's good. The MACD is actually hinting that the upside is pretty limited. That's how we're looking at that. And now let's look at the RTH, which I haven't looked at for a few days. Oh my, look at that. There's that rectangle formation that's been pierced in the weekly chart, but look at the solid candles, almost so reluctant to give up anything. Look, the MACD's turned down in the weekly chart. The stochastic's been pulling back for at least 5-6 weeks. It is in the market vectors retail ETF that if we go into it, you've got Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, MCK McKesson, Target. That should be Target. What is this? Get rid of that. Target, TJ Maxx, Whole Foods. Look at Whole Foods. You remember I said months ago, I said this is a real good, it was a year ago, that Whole Foods has made a hat-trick top. Look at this. Trading down 4.38 at 43.33. Peak E doji in the weekly chart. Peak E top at 65.59 in the monthly chart. Daily chart is at a series of turnarounds. The last one was a peak C1, C2. But this is very interesting. Why? Because you have to go back all the way to there. Those two dojis at the top of 65.59, that's the real top. The other was a retracement failure mode. So that's Whole Foods. And yes, so now this is what I want you to do. High-grade copper. High-grade copper has gone to a peak C. It's acted extremely well over the last week and a half, 2 weeks. I mean, it's just a spectacular move, going from very poor to very, very strong in the short. I'd even say short to intermediate term-ish, not really intermediate term, just intermediate term-ish. Why? Because the V-shaped pattern in the monthly says, okay, great move. We've done this before and failed. What's different about this time? I don't see anything that's different this time other than the MACD. No, you went to a lower low. And yeah, I could say that there's a little bit of a divergence because the MACD's a little bit better. The slow-moving average is better than the fast-moving average, but the stochastic went to a lower low. So this has to be treated as a counter-trend bounce for now. But in the meantime, it's a very good bounce going from the 2.6 area lately to 2.9. So that's a big move. So we're going to be watching it close. Let's go to Stephen Tapp. Oh, Stephen Tapp is not on the phone. He wasn't on the phone. He wanted to know about Gild. That's Gilead. G-I-L-D, Gilead Sciences, trading at 100.94, down $1.33. Peak F top in this last move in the daily, right there. What was the high? The high was, I'm looking for round numbers, 106.34, 107.50, 107, no round numbers. 107.50 was the most recent high, but that's not the high, 107.50. The all-time high was made about 7 months ago at 116.83. Peak E in the daily, peak D in the weekly. So there was monthly, weekly, and the last one, just the rally, little brief rally, has been a peak F. And let's see what that all-time high was, if I can find it. There it is. Oh, I remember this. I remember this so well. It's one of the very few charts that had this crazy pattern, went to an all-time high. I said at the time, there's no way I could count this other than that it was in a peak, that there was a brand new buy signal that went to a buy mode, and it ran to peak A and then B. Why? Because the last move was E to F at 110.64 back in September-ish of last year. Then it pulled back very sharply to the 94-ish area and had the spectacular move up to 116.83. I could make up things and say, you know what, we could have a restart, instant restart, and unconventional. So it's A, B, maybe C. No, it failed. C and then D, and use that instant restart all the way back to there as the low point. I don't want to do that. I'm just going to say this will go down as one of the examples of a failure to go to an all-time high at D, E, or F in the daily chart. It happens once in a while. This is the once in a while. So the question is what to do. I don't know, Steve, if you told Al that you were long or short or whatever. All I'm going to do is the analysis. The analysis says that there's a really good chance that Gilead Sciences has gone from a major buy mode to at least a sell mode in the daily, a sell mode in the weekly. If the sell mode will be confirmed, if it takes at 101, if it takes out 96, 95 support in the next 4 weeks without breaking above 110, that'll confirm that the sell mode that was generated way back in October at the high of 116.83, that was the week of October the 31st, that's saying to me that there's a real good chance we're forming the H2 lowercase m pattern and that it's going to fail. So if it breaks into the 110s, I've got to say, it's holding well. It doesn't mean it's going to go to new high at 116.83, but it does say it's holding better than I expected. If I was you, I would put and I'm long in a core position, I would take something off right now, and I would take a little bit more if it takes out 90, 95.38. Keep your core position, and we'll look at it again in a week. I don't want to get too carried away here. It's just that I believe you'll have a better buying opportunity to put that money back to work at low prices. The monthly chart is making what I can first of all call a rectangle formation. Then I can call it an attempt to make an arch formation that goes to a peak A, then a B, then a C, and a D, but it's starting to fail. I think it will fail. So now, if you don't have any position, would you short? I would absolutely short. I would start a little nibble on the short side here at 101.05, and I would add another position at 102.83, just above the 9 EMA. And on the whole position, I'd have a 104 stop. I think that 3 points was 3.5 points on $102 stock. $101 stock is what is that? It's 3%, not even 3%. I would have a very, very tight stop, buy stop. That is, if I was short. Now, is this something to look at for a put position? I would say yes. I would actually prefer to rally a little bit more. I'd like it to get to 103.50, maybe not break 104, but 103.50, and then I would think we're in May, June, a July put, a July 102 put, 102.50 would be something that you could consider. All right, so that's that. And now let's look. So GENE, that is genetic. No, that wasn't what I wanted to look at. It wasn't gene, it was Celgene. CLG, one of the great NASDAQ stocks, probably made a peak D of consequence in the monthly chart. Peak E of consequence has been made with a sell mode in the weekly, and the daily is trying to bounce. All of these biotechs, the way I read it, they've got a real problem coming up. We'll be back with Ben in Tallahassee straight after this break. And the Dow's up 79, S&P's up 79.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We're back. Dow's up 70, S&P's up 7. We're going to go straight to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm well, thank you.
Good.
So,
You probably dug deep into the VIX already, but hopefully it's. I think it looks pretty good from a trading standpoint. Correct me if I'm wrong. So in the daily, I got if there's no new high today, a peak B, and then it's sitting right on top of that 200-day. Am I seeing that right?
you're talking about the VIX itself, right?
Yeah.
So the 120-minute chart has made a peak D.
The daily.
Yeah, the daily is only in leg A.
Oh,
Why?
Really?
You see, it went down to 12.10 the other day, so that's the lowest low.
Right,
now,
but you got you have, but then okay, so A would be what's the date?
Yeah, you see what you've done. You've taken it from the low of the 1251, the low of the 10th of April, and you've counted each successively higher peak, A, B, C, and that would be D, that's being made today if there's no new high. But remember, new lows negate that, and they become A minuses. And the very interesting thing about A minus is it's called the restart in the Chapman wave. That's that chapter that I have on the restart now. What's really important about this is that if you get 4, 5, you could even get 6, but about 5 is the limit. And we've had 4. We've had 4 restarts since the 17.17 high that was made back in March. Then there was a pullback to 1254 in the VIX index. Then there was a rally that took out the previous high and went to 1719. So that was an A, but it became an A minus because you started off fresh with a lower low and you went to a higher high. That's like an engulfing candle
Got it.
all together.
No, I didn't see that.
Yeah, so now we've got 1254, 1251. 1250, 1212, and now 1210. This is the, it's the 1, 2, 3, 4, 5, 6. It's actually the sixth A minus that we've had theoretically, but at the same time, I would, for all practical purposes, I would say that the A that is being made right now is the first A where you've seen a very strong, legitimate rise in the histogram of the MACD, in the MACD itself, and the slow stochastic, which says, unless the Dow goes to a 90 or 100, plus 90 or 100 today, with the S&P going to plus 10, there's a good chance the 200-period exponential moving support of 1496 will hold. This is the first period we've had where there are a whole bunch of factors coming together to suggest that this time the VIX could in fact have another big move, and there's all news that's coming out tomorrow. Who knows what it is? But the way it's acting, this is the first time there's been a little bit more of a sustained move, and not intraday. There's been a sudden turnaround, and you've gone from a letter D, certainly, to a very sharp sell-off. Look at the sell-off that occurred in the 120-minute chart from the previous peak D back at 3:30 in the afternoon of the 30th of April. It plunged from the 15s down to the low 12s. So this is the first time we've got at least an opportunity to see the VIX index hold, and at least in the daily, make a leg B. So your question is that as a trade?
Yeah, so I thought this might be a good time for the UVXY.
We're about to go to Larry Pesavento, which will be a fabulous show. I'm looking forward to it. But let me just say, I would nibble on the position now, and I would add to that position on the UVXY at $11.51, and on that second position, put a tight to stop. Have a great day. Thanks for calling, Ben, and I'll speak to you soon. Folks, have a great day, and have a great weekend. I'll be back on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.